Hello and welcome. This is Business Incorporated on Channels Television. I'm Chimeze Obi Iwago. On the show today, World Bank commits $12 billion for COVID-19 vaccination in Africa. African Development Bank backs young agripreneurs to beat climate change. And Ghana tightens restrictions as coronavirus cases climb. We'll get the show started with intraday market numbers, and here on the African continent, markets were all in the positive territory. Nigeria's main index sustained last week's positive sentiments as it rose 0.08%, while the JSE index in South Africa surged to 1.14%. In Egypt, the EGX 30 was also positive, rising 0.38%. Kenya closed negative on Friday. It was a similar picture in the Middle East, where major markets were in the positive territory at intraday. In the UAE, Dubai's main index jumped to 1.60%, while the Abu Dhabi index advanced 0.74%. Elsewhere in the region, Saudi Arabia's market rose 0.50%, while the Qatari index was higher by 0.09%. In Europe, stocks advanced today, echoing positive market sentiment elsewhere. Okay, let's cross over now to Frankfurt. Conrad is on board and standing by to give us all the updates that we need. Hello, Conrad. Good afternoon. Good to see you again.
Good afternoon, Chimi. It's great to be back on Channels TV. Hello, Lagos. Hello, Nigeria.
Great to have you. Well, less than a week after hyping shares of embattled video game retailer GameStop, investors on Reddit message boards have moved into the commodities market. Silver futures are up 10% after users on the Reddit message board organized to invest. How are people in Frankfurt seeing all of this in a financial center with a more traditional approach to trading and banking?
Well, of course, Chimi, traditional bankers and brokers are seeing this as a threat. They're concerned. They're concerned that all this might scare off, mom and pop investors who for such a long time the banks have tried to convince that it's a good idea to get invested in the market for their retirement savings. So, of course, there are these concerns. On the other hand, the banks are also profiting. They're profiting from the higher volumes in trading, because we shouldn't forget that, retail trading platforms like Robinhood, or here in Germany, Trade Republic or eToro, they themselves need service providers in order to be able to offer their services. So the backbone of the markets remains still the traditional banks and the traditional brokers. And make no mistake, of course, we should keep in mind what the aim of those small investors is. It might sound very appealing, the story of the little guy dealing a blow to the establishment, but those small investors on those platforms also really want to make money. They do it in a very clever way. They unite interest of retail investors on those platforms in order to help their trade gain momentum. This also will work for a while, but not everyone will win from it. Some investors will also be losers, so the warnings of the traditionalists should not be ignored.
Now, all of these, of course, are very entertaining, but is it not a bit of a sideshow compared with signs of a loss of economic momentum as coronavirus lockdowns bite?
Yes, we shouldn't forget what's going on in the real economy. Over this weekend, the German government imposed new, very strict travel restrictions on countries like the UK, Ireland, Portugal, and a few more. So the travel restrictions are back. And also, I have to say, what's really important from an economic point of view right now is what's going on in the manufacturing sector. This morning we got a purchasing managers index from China, which came in slightly lower than anticipated, which is a bit of a warning sign. And on the positive front, Germany's purchasing managers index and also the one from France, both came in slightly better than economists had forecast. Both are also robustly above 50 points. That's the threshold that indicates a growth, or that separates growth from a recession. So the manufacturing sectors here in Europe are still positive, optimistic, and as a consequence, there's a positive stock market also here in Frankfurt today, as you can see right behind me.
I see that, Conrad. Well, Italy is in search of a government after Prime Minister Conte has given up his post. Now, rumors are coming from Rome that Mario Draghi, who used to be the president of the European Central Bank, might become the new Prime Minister of Italy. Where is this coming from and how probable is it?
This is coming from Matteo Renzi, the man who used to be Prime Minister of Italy himself and whose party left the coalition government. So Renzi is basically the reason why Italy is searching for a new Prime Minister, for a new government again. It's important to note here that Matteo Renzi's party is really small. It will not be able to provide the Prime Minister itself. This is probably the reason why Renzi came up with this big name, Mario Draghi. Would Draghi stand a chance? Well, I can tell you that many people in Europe's capitals, also here in Germany's financial capital, Frankfurt, like the idea of a grand coalition government in Rome with a strong European on top. But on the other hand, we all know that Italy's parties have a reputation of being very anti-establishment often, and they also keep insisting on their rights to decide what's going on the national level in Rome. So the only thing I can tell you for sure is that Mario Draghi, if he became Prime Minister of Italy, he would really face a very, very tough job.
Well, I'm sure this is a development markets should be following, particularly as it concerns Mario Draghi, as you said. So let's keep a track on those. And the week has just started, so we'll have quite a lot to chew in the week. Enjoy the rest of the day. In the meantime, the Financial Times has flagged up that those hoping to hurt Wall Street banks by piling into silver could get stung. Silver today hit $30 for the first time since 2013. While Redditors set sights on silver, let's see how the London markets are doing this intraday and, of course, their drivers. Let's talk to Juliana now. Hello, Juliana. Good afternoon. Well, you spoke to me this morning about ASOS, now the new owner of Topshop and other leading brands from South Phillip Grains, Arcadia Empire, after a £295 million deal that puts more than 2,500 jobs at risk. So how have the markets reacted so far to that announcement, and how is ASOS shares doing now?
Good afternoon, Chimi. Well, ASOS shares are flying high at intraday. They're up 6.5%, and that's because, as you quite rightly said, they've become the latest online retailer to swipe up some of the old boys, and they've taken a big share of the Arcadia group. I would say probably the most premium brands, which are Topshop, Topman, Miss Selfridge and HIT, which is a fitness wear. A cut price deal, they've purchased it for £265 million. They've paid a further £30 million for stock and £35 million for stock that's on its way. As you said, not a great day for the high street, unfortunately, because that means 2,500 staff are going to be made redundant. And this is really the demographic that are losing their jobs quite prolifically here in the UK. That's 16 to 24-year-old age gap. And unfortunately, it's going to be very difficult for them to find other jobs in the retail space because there just aren't any. As you said, silver is trending at the moment, and that's because lots of small-time traders have been urging traders online on social media to go and purchase the commodity. And so the FTSE is benefiting from that. The all share is up 0.68%. The FTSE 100 is up by 0.63%. And the FTSE 250 is up by 0.73%. In the currencies market, the British pound is also surging. It's up against the US dollar by 0.13%, up against the euro by 0.57%, and up against the Japanese yen at intraday by 0.28%.
Interesting. And in another corporate news, Ryanair has warned it is hurtling towards an annual loss of nearly £880 million as the budget airline struggles through the most challenging year in its 35-year history. That was expected, wasn't it?
He was expecting. I've got to say, here in the UK, Chimmy, what the business papers have been picking up is that the pretty unfiltered boss of Ryanair, Michael O'Leary, he's been speaking to the BBC's Today programme, and he says he is expecting a bonanza summer period. And this kind of echoes what we heard last week from EasyJet, who said that they have seen interest in summer holidays peak by 250%. They're pulling all their money in on this vaccination rollout. It's going pretty well. I believe yesterday Britain had a record 600,000 people vaccinated. They're trying to aim for 3 million people getting vaccinated per week. And if it does follow this trajectory, and then what you will see is a lot of Brits want to go on summer holidays, and Ryanair are really looking to cash in on that. He also spoke today about the fact that a lot of airlines have collapsed during the COVID pandemic, Flybe being one of them, and Ryanair have really been able to take over some of that marketplace. So even though things aren't great at the moment, he is hoping that over the next couple of months, if the vaccine rollout does go as it is going, then things could improve by the summer. Fingers crossed, because we're desperate to get away.
Yeah, fingers crossed. Okay, in the meantime, a flurry of purchasing managers surveys expected today. The UK data is expected to confirm there was a sharp slowdown last month. Is the PMI out now? I tried to check before coming in, I'm not so sure. What does it say if it's out?
We do have some PMI data. We've got the final PMI reading for manufacturing. So this is a private sector look. It's come in January at 54.1, still much better than was to be expected. 50 being the threshold. So anything above 50 shows that the market is contracting, is expanding. Anything below 50 is a contraction. It is a sharp fall from December, which is 57.5, but a lot of observers are saying in December it was kind of an artificial piece of data because so many companies were pretty feeling a little bit anxious about a Brexit deal. The Brexit deal didn't come in until Christmas Eve. And so what a lot of manufacturing companies were doing is they were stockpiling. It's lower now because, as we've been discussing on this programme, Brexit is biting. There are so many new rules, lots of red tape and bureaucracy. Many manufacturing companies have actually decided once and for all that they won't be trading with the EU again. So we'll have to wait and see how February, March and April will turn out, because January is typically a slow month. But yes, we've got the data in and it's 54.1 for manufacturing. More PMI data to come during the week.
Great. Thank you, Juliana, for those updates. Okay, let's continue to keep a track on those. See you tomorrow. And stocks in Asia Pacific surged today as silver prices saw strong gains. South Korea's Kospi led gains among the region's major markets, jumping 2.7%, while Hong Kong's Hang Seng Index also saw robust gains, advancing 2.15% to finish its trading day. Mainland Chinese stocks nudged higher on the day as the Shanghai Composite rose 0.64% and the Shenzhen Component advanced 1.36%. In Japan, the Nikkei 225 rose 1.55%, while the Topix Index advanced 1.16%. In Australia, the S&P ASX 200 edged 0.84%. And in the U.S., stock index futures were positive in volatile trading following last week's heavy losses. Futures contracts tied to the Dow Jones Industrial Average rose 173 points. S&P 500 futures and Nasdaq 100 futures both traded in positive territory. The move came in a choppy session, with Dow futures dropping 300 points earlier. The Dow dropped 620 points on Friday to close below the 30,000 level for the first time since December. The Nasdaq Composite also slipped 2%, while the S&P 500 fell 1.9%. Mozambique's emerging gas sector faces potential delays and cancellation of downstream projects because of the insurgency in the northern province of Cabo Delgado. Some downstream projects have already been cancelled, leading the economy's intelligence unit to revise downwards its GDP forecast for 2023 to 2025 to an annual average of 7.6% from 8.7%. Now, joining me now to talk more about this is Matt Kindiger, the Associate Practice Lead at Frontier View. Thank you very much, Matt Kindiger, for joining us.
Thanks for having me on the show today.
So tell me, to what extent does the insurgency in Mozambique pose a risk to the development of the gas industry in Far North, as well as to companies operating in other parts of that country?
Yes, well, as you've mentioned during the intro, the gas industry will be crucial for the development, the economic development of the economy over the coming years. So it really is important to be concerned about the risks that the recent insurgency poses to the gas industry. In our view here at Frontier View, in short, it probably doesn't pose a fundamental risk of derailing development of the gas industry. And this is because it's in the interests of the gas companies and the government to ensure that these developments do go ahead. There could be delays, there could be disruptions to the development of gas downstream facilities, but the prize is just too great. The revenues from gas are pretty significant, or the potential revenues. So we do expect the government to prioritize security in the far north of the country, protecting gas developments, but companies in other parts of the country, I would note, certainly should not be concerned about the effect of the insurgency on them for the foreseeable future.
So given the challenges facing the development of the gas industry, how do you expect the economy to perform this year?
Well, so if we look back to 2020, we're still waiting for full year data to come out, but we're forecasting a full year recession of about 1% contraction, so not very significant. We're currently forecasting growth of about 4% this year, so substantial improvement over 2020. But we are now we have a downside bias for growth this year. And this is because, we've talked about potential disruptions to the gas industry. There's also a significantly depressed tourism industry as a result of very weak global tourism demand. That will affect Mozambique. And also, government finances are in a pretty bad state in Mozambique. So the government has very limited capacity to stimulate the economy. So overall, not a bad year for Mozambique in terms of growth, but I wouldn't say a particularly upbeat one either.
So what else should companies be aware of in Mozambique this year?
Yeah, so there are a couple of other things companies should probably monitor. One is that conditions, business sentiment, business conditions, overall operating conditions are probably going to be better in 2021 versus 2020. But there are a couple of risks on the horizon. One is that the government has been banking very heavily on gas windfalls, so revenues from the gas sector. But because these are likely to be delayed because of the insurgency, selling to the government is going to be very difficult for the foreseeable future. We also expect to see disruption for companies that sell or import products from South Africa for the foreseeable future. And this is because of obviously the ongoing COVID pandemic in South Africa. We've seen the government close the border from time to time. Maputo is particularly vulnerable to this because of its close economic links and trade links with South Africa. So there's probably, that does represent a risk. We also are forecasting a sustained, although not terribly fast, depreciation of the currency, the Metical, this year. This could drive up costs for importers. So that's also something to bear in mind over the course of the year.
All right. Thanks, Matt. Always a pleasure to have you on the show. Thanks.
Thanks very much.
And the World Bank has committed $12 billion to African countries to support vaccination programs across a continent that hasn't been able to keep pace with developed nations' rollouts. According to the World Bank, the fund will be in the form of grants or on highly concessional terms. The continent has secured 36% of its vaccine needs, with 25% of the doses to come from the COVAX initiative and 11% from a separate African Union program. The African Center for Disease Control says the cost of vaccinating 60% of Africa's 1.3 billion people will be between $10 billion and $15 billion. And the African Development Bank plans to deploy billions of dollars to help young people build a new digitally driven model of agriculture that can feed people and boost prosperity even as the planet heats up. The AFDB president, Akinwumi Adesina, says the bank plans to put $12.5 billion between now and 2025, which is half of its climate finance towards the initiative. The AFDB also plans to raise an equal amount from donor governments, the private sector, and international climate funds. According to Mr. Additional, the new program is an opportunity to put adaptation on steroids by focusing on improved food production, climate-resilient infrastructure, youth entrepreneurship, and better access to finance. And Ghana has tightened COVID-19 restrictions, imposing a ban on social gatherings as the number of virus infections spiral in the country. According to President Nana Akufo-Addo, the restrictions became necessary as hospitals are filled up and the country needs to reactivate isolation centers. The new measures on social gatherings come as the average daily rates of infection is at 700 compared to 200 recorded 2 weeks ago. Economic growth is expected to plummet this year to its lowest in 3 decades, to 0.9% from 6.5% in 2019. And still staying with Ghana, the country's debt situation continues to deteriorate as total public debt stock to GDP rose to 74.4% at the end of 2020 from the 62.4% recorded at the end of 2019. Our data released by the Bank of Ghana shows that a component of the debt secured outside the country remained relatively stable in the last 2 quarters of 2020, rising marginally to 139.6 billion cedis. And this is about 36.2% of the total value of the economy, which is projected to be about 385 billion cedis. Meanwhile, the component of the debt secured locally rose significantly in the last 2 quarters of 2020 to 147.3 billion cedis, representing 38.2% of GDP. And oil prices edged higher earlier today after a weak start, although patchy coronavirus vaccine rollouts, new infections, and the discovery of new variants are keeping a lead on prices. Brent crude futures were up 10 cents at $55.14 a barrel, while U.S. West Texas Intermediate gained 1 cent to $52.21. Oil prices have been boosted by vaccination programs getting underway in hard-hit countries and output cuts by major producers like Saudi Arabia. But euphoria over a possible end to the pandemic has been undermined by the slow pace of vaccination and the rise of new variants of the coronavirus. That's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwagu.